Health savings accounts got supercharged in the recently passed House tax bill. I'm going to break down the benefits you're going to realize in your health savings account. We're talking about putting more money in and being able to use that HSA for more and more things. I'm going to break that down in today's video. I'm Matt Sorensen. Let's build wealth. All right, there's a lot of things to love in this tax bill with respect just to HSAs. The first thing I want to get out of the gate is you can use it for more things. Under the new bill, a qualifying medical expense now includes fitness instruction and gym memberships. That's right. You will now be able to use your HSA, assuming this bill passes the Senate and President Trump signs it into law, but you'll be able to use this to go to the gym or to pay for fitness or other physical activity. This is part of RFK's message and the Trump administration now of trying to get people out there getting fit, getting active as one way to curb obesity and other health ailments. Now, they did put a restriction on this on how much of it you can use though. This is $500 a year for individuals, up to $1,000 for family. That can be used for a gym membership, fitness, or other instruction for physical activity. All right, I'm gonna rattle off some other cool things here, but let's hit the next one that is pretty big. You can put twice as much money into an HSA now under the bill if you qualify, okay? So right now, the amount you can put in as an individual is $4,300 as a contribution into your HSA. You get a tax deduction for it, right? You can invest it, you can self-direct it, you can put it into real estate, a private company, a private fund. You could buy a stock or anything like that, but we're doing, of course, self-directed HSAs here at Directed IRA. But there's no taxes as you're investing it, and there's no tax on the way out when it comes out for qualifying medical. This is why everybody loves an HSA. This is why me as a tax lawyer at heart, I freaking love an HSA because I get a tax deduction on the way in, I pay no taxes on investing and growing it, and no taxes on the way out. But the good news is here in the bill, some people will be able to put double the amount of money in per year. So that $4,300 will go to $8,600 for single individuals, and $8,550 for family is going to go to $17,100 for family starting in 2025. Now there is a catch here, of course. This only will apply, this doubling of the amount you can put in, for single individuals, $100,000 of income or less, or married couples, $150,000 or less. So high income earners, even middle income earners, maybe over this, you're not gonna be able to use this and double up. There's still all these other perks in the HSA that we're gonna talk about here, but this one, the doubling of how much you can get in, keep in mind, there is some income restrictions on that, but still pretty cool, particularly for those that are in those income thresholds that are gonna have medical and wanna get that money in, get a tax deduction, and need to come up and build that account for their qualifying medical expenses. Now, the next thing that's cool about this is you can move money from other accounts to your HSA now. For example, if you have an FSA or your spouse maybe has a flexible spending account with an employer, you can roll FSA balances into your HSA. That's great because those FSAs are typically use it or lose it. Well, what happens at the end of the year if you don't use it? You lose it. But what could you do? You could roll it now to your HSA. Now that also applies to HRA balances that you do not use. You can also roll over to an HSA. Now there is an annual limit on how much you could do that for. It's $3,300 on what you can move from an FSA or HRA over to your HSA. Now the next thing supercharged for HSAs is those 55 plus are allowed to put an extra $1,000 into an HSA. Now under the current laws, it's a little jacked up. A married couple that has a family HSA can only do $1,000, but two single individuals that are not married could each do $1,000, so they'd be able to do $2,000. Now this is fixed in the law right now, if this again passes, where you can, as a married couple, both put in $1,000 for a total of $2,000 into the HSA, making the family contribution. So that might seem a little complicated if you're not too familiar with HSAs, but for those of the nerds out here watching, you know that's a cool perk. The next thing, more people will qualify for an HSA under this bill. To qualify for an HSA, you have to have a high deductible plan. And under the current laws, bronze plans that you might buy on an exchange don't all qualify. Under this new bill though, any bronze plan bought on the marketplace will automatically qualify as an HSA qualifying plan. That means a lot more people will have the option of opening up HSA accounts. All right, and the last thing here that I want to go over on HSAs, there just at least keeps on going on. It's pretty good. If you're someone new setting up an HSA for this first time, one of the frustrating things is you can't go back and reimburse yourself for medical expenses before you had the HSA. There's only medical expenses incurred after you have the HSA. Well, a lot of people have some medical thing that happens and they're like, well, crap, I wish I had an HSA, and they could go set one up next month. But under the current law, you can't do that. However, Under this bill, you can go back up to 60 days from setting up a new HSA and reimburse those expenses, and of course, any medical that you have moving forward. So another kind of perk here for those that are new to HSAs or have a new opportunity to open one to go reimburse themselves for qualifying medical and get a tax deduction in the process. Now, make sure you're subscribed to my channel. I'll be updating you on this bill, the other provisions in this that could benefit you as a taxpayer, someone building and trying to grow wealth. Also, I've got a lot of tax tips to do no matter what is pending in Congress. We also talk about asset protection, growing and building wealth, retirement accounts. I'm Matt Sorensen. We'll see you next time.